Let's get more on this stock rally from Andrew Pink, Senior Portfolio Manager at LDIC. Andrew, great to see you. Thanks very much indeed for joining us, and happy Monday. I guess all parties come to a close at some stage, but right now, equities rocking and rolling to new records.
Yeah, it's been quite a ride for sure. We saw in the first three quarters the TSX up 24%. And, a lot of people ask, is this sustainable? What are we going to get in the fourth quarter? And look, I think it is sustainable. We've got, if you really look at that 24% in the first three quarters, a huge component of that is materials and largely gold. So if you really net out materials altogether, we're only up about 10%. Every sector has participated except for healthcare. So we're tracking 10%, maybe a little bit above trend, but I think there's still upside. The central banks are working in our favor, and we're going to likely see a cut out of the Bank of Canada coming up on October 29th. Probably the Fed moves once and maybe even twice this year. So we've got rates heading lower, interest rates heading lower, and that bodes well for valuations. And it also bodes well for the economy in general. So I see in Q3 earnings, I think might even be better than Q2 what we saw, because we saw a very healthy Q2, but what we didn't get was guidance out of the companies, largely because of the trade war. We might get guidance in Q3. The trade war seems to maybe be behind us at this stage. So we'll see what happens and how these companies want to report, but I think the fundamentals are still strong.
I mean, obviously the tariffs stay in place, but the alarming headlines about the trade war have diminished, as you say.
Correct. Yeah.
Gold, do you think there could be upside here? The generalists may not have piled in. Of course, that's what the gold bugs have been saying for years. The generalists are not invested in this space.
I completely agree with that. I was out with about 24 portfolio managers recently and kind of did a private poll to see how investors or these PMs were invested in gold, and largely no one is over about a half weight in gold from what I can tell, and that's where we are. We're about 6 or 7% in gold. I don't want to go too deep, but I do think the dynamic that's happening here is not just a flight to safety, which we had originally identified, but I think it's international sovereign funds and central banks coming out of U.S. Treasuries on the uncertainty that's cast by Donald Trump, and I think that capital needs to find a home, and gold is such a small complex compared to the U.S. Treasury. So even if a small component of that finds its way into gold, it can really do a significant move on the price. And so I think it's possible that we're only in the second or third inning on this. So we're going to stay invested. We're going to watch it. That's where we are on gold.
You do like these engineering stocks, and I know Reuters is talking about this partly because of higher Canadian defense spending. One name that's caught your eye is Atkins Realis.
Yep. Atkins is it's the former SNC-Lavalin. So as we all, I think, know, they were caught up for probably over 2 decades in bribery and scandals and fraud and all the rest. And so it was a name that we largely avoided for a long time. They've rebranded. They've got a new executive team, new CEO, and the company's doing extremely well. They've got a big footprint into nuclear, and we think that that's going to be a huge part of the energy transition theme. And it's cleaned up. So they're buying international assets. They've become a global engineering firm. They've gained the respect of, I think, investors, and I think they finally put all of that scandal into the rearview mirror.
Another cyclical name you have for us here is Chemtrade. Well, I don't know how cyclical it is. It's in the chemical business. But remind us why Chemtrade has caught your eye.
Yeah, Chemtrade is it's kind of just an easy company to understand. They sell chemicals. They sell chemicals into the pulp and paper industry, into the energy services area, and they sell like chlorine that goes into water treatment facilities. A new line for them is actually what's called ultra pure acid, and that goes into making chips, so semiconductors. And think about this whole onshoring theme, and as these big fabrication manufacturers of chips come back into North America, they require ultra-pure acid to manufacture the chips. Chemtrade is one of the only suppliers of this chemical. And the one thing to remember about Chemtrade is, they're selling a chemical into these companies, into these industries, where the chemical cost is just a fraction of their overall cost. So even if the chemical price goes up, 15, 20%, it's not a big deal for that to be absorbed by these industries, and Chemtrade gets the benefit.
Yeah, it's interesting. Yeah, it's good to be selling something where your customer is not that price sensitive.
Correct.
Another stock that's caught your eye is Descartes Systems. Now, this one has been suffering.
Yeah.
What's your thesis there, Andrew? Would you be a buyer?
No, so we had owned this stock for a long time. We trimmed it earlier in the year. We actually ended up selling outright last week. I believe we've exited the position. And largely, this is a software company. And when I met with them several months ago and asked the question about AI and how that looks for them, the answer was, we're going to try to adapt to it, and we're going to try to use it to engage and better our product. I just think that a lot of these software companies are threatened more by AI, and AI can produce an alternative to their product, I think, fairly rapidly, and we haven't seen that complete shift yet, but you can envision over the next couple of years, I would imagine AI is going to have a real handle on this whole. And as a reminder, this is a global logistics company, and they sell software and they license it to individuals. So, we've moved on from this name. We'll revisit if things were to change, but I think there's some risks there.
Yeah, so we had a banner, that wrongly said you favored Descartes, but that's a stock you're avoiding right now.
Yeah.
We are tight for time. Constellation Software and Shopify are also not calling to you right now. You wouldn't put new money there, Andrew?
Yeah, just valuation. I manage some medium and low risk portfolios and mandates, and so the valuation on these names is just too high, and we worry about the volatility, the associated volatility, when you buy an exceptionally high value or high multiple stock.
Thank you so much, Andrew. Really appreciate it.
Thanks for having me.
Andrew Pink, Senior Portfolio Manager at LDIC.